everyone, it's good to have you back again. It's Thursday the 15th of October, and in news today, precious metal and Bitcoin bulls just beginning. Part of the dilemma for many investors right now is, where is it safe to put my money? We're in a rare period of extreme uncertainty where even traditionally safe havens such as Aussie property are looking decidedly shaky, and indeed already posting negative returns. In the past, going to cash was a common response, and yet the combination of effectively zero interest being paid and the new and looming prospect of bank bail-ins is playing on more people's minds. Moreover, more people are becoming aware of the unprecedented debasement of that cash they are holding as governments print more and more of it. Finally, bonds appear zero-bound and equities are presenting P/E ratios completely out of sync with the fact we are in a recession, both the result of aforementioned monetary stimulus. It's instructive to look at equities using the US Dow Jones as the global proxy compared to the hard asset alternatives. First, looking at gold, you can see, despite some feeling like it's at a high, when priced against the Dow, it's still at rock bottom prices, but most certainly starting to make a move to revert towards the mean. Remember when looking at this chart, that is a log scale, that should be coming up on your screen now, guys, moving from the 1950s over to the 2000s. As you can see, gold is commencing a retracement from a high only seen 3 times before in history. Inverting that chart and adding some technical indicators, you can see the setup is indeed quite alluring for the yellow metal. You should see a new chart now on your screen. Silver too looks similar, and that last big dip, which was 2011, is still quite a long way off from the current position. Remember in 2011 we saw the silver at $50. You can see that here. Bitcoin doesn't have the history to map out like the precious metals, but it is forming a channel in its brief history against the Dow that is trending in a bullish direction from the digital currency and indicating it is poised for a pronounced bullish run against the Dow as it sets its upper range. And you can see that here, guys, another chart for you to look at. The Felder report recently spoke to this setup for gold, as well, with the following being an excerpt from the Paid Pro report. It says, with the gold price up about 100% since it bottomed 5 years ago, some investors seem to believe that it has gotten overpriced. In addition to watching important drivers of the gold price, one way to look at its valuation is to simply compare it to popular alternatives. The gold price relative to the Dow Jones Industrial Average would seem to suggest it is not expensive at all. In fact, to match the valuation peak it reached about a decade ago, gold would need to double again from its current price. Of course, that would still leave it far below the peak seen 4 decades ago. So gold's upside potential over the long run looks far from exhausted even after its terrific run over the past few years. Hope you guys enjoyed the article today. That's news from us. For any gold and silver products, please visit ainsleyBullion.com.au, and for any of our crypto products, please visit ainsleywealth.com.au. Hope you guys have a good day, and we'll see you tomorrow for more news. Bye.